Say you buy a coffee and a hot dog at 7-Eleven, which comes out to $7.24 with tax. 2 seconds later, the terminal says approved, and no money moves for 2 days. Wait, what? In between, 3 companies take a cut of that $7.24, and the biggest one doesn't go to Visa. Let's start with what left the terminal, a simple digital question. Your card number, the amount you paid, and a code for what kind of store this is are packed into a format the International Organization for Standardization first published in 1987, still known by its number ISO 8583. That question takes 3 hops, gets answered on a 10-second clock, and moves exactly $0. It's the first of 2 messages for a credit card transaction. Moving the money is a separate job that happens after you leave. If you tapped or dipped your card, something called a cryptogram rides along. A cryptogram is a code the chip computes for the transaction. Visa's rules make your bank validate it and ban the versions a static key could reproduce. A magnetic stripe can't do that. Its track data can be copied straight off the card, which is why Mastercard has already scheduled the stripe's funeral. Say goodbye. No new Mastercard gets a stripe after 2029, and by 2033, they're all gone. Now, that digital question makes 3 stops: the store's bank, the network, and your bank. Then the same 3 in reverse. The store's bank is the acquirer, and it's the one that signed the merchant agreement. The merchant agreement is the contract that allows a store to take a credit card as payment. Mastercard told the Philadelphia Fed why the network doesn't sign it directly. Retailers aren't capitalized or supervised the way banks are, so a bank has to sponsor them in. Now the message arrives at stop 2. The network scores that message plus everything it already knows about that card in flight. Hundreds of attributes in roughly 1 millisecond. Then the score goes to your bank, which has the final say in approval. The approval process must be timely. Visa's rulebook gives an issuer 10 seconds to answer a point-of-sale request. Miss it, and Visa answers on your bank's behalf. The rules call this stand-in processing. Since October 2020, banks can hand that job to a neural network Visa trained on their own past decisions. It matches them more than 95% of the time, compared to 67% for the list of rules it replaced. So Visa built an impression of your bank, and your bank is responsible for whatever that impression says. Visa's rules put every stand-in approval and rejection on the issuer. Remember, just because you're approved to purchase that delicious coffee and hot dog by credit card doesn't mean that 7-Eleven immediately receives your money. Authorization is a decision, not a payment. The step that follows it is clearing, what the Philadelphia Fed calls a non-monetary exchange of information. What the store holds is closer to a bar tab, a promise with an expiration date. Under Visa's rules, a card-present approval is good for 5 calendar days. As a customer, your job is done. As a store owner, you still have work to do. The store's transactions are sent in a batch to its bank, at least once a day. That batch is the second of the 2 messages. The first asked for approval back at the terminal. This one bills. Clearing typically lands within the day. Then there's settlement. The key point is that nobody wires $7.24 between banks. The network totals what every bank owes every other bank and moves one net number. It's last call, except the bar is the entire country. Let's look at Mastercard. It pulls its members' money over Fedwire, using a message whose entire job is to ask another bank to pay. It finishes about 2 days after you walked out, and the clock only runs on weekdays. U.S. settlement generally runs Monday through Friday, so a Friday night hot dog waits for next week. So, who took what? We'll start with the biggest cut. It's called Interchange, and the store's bank pays it to your bank. Visa publishes the whole schedule, and page 1 says merchants don't pay Interchange at all. They pay their own bank a merchant discount. Visa's April 2026 schedule starts a card-present retail sale at 1.43% plus 10 cents on a basic card, and runs to 2.3% plus 10 cents on a Visa Infinite. On $7.24, that's between 20 to 27 cents. And the dime is the story. On a $7 basket, it's half the fee. On a $100 basket, it's 6% of it. The dime doesn't care that you bought a hot dog. Notice which card was cheaper, too. The premium rewards card costs the store almost a full point more. That's your lounge access, funded one hot dog at a time. Now, the store never sees that 20 cents on its own. It pays its bank one blended rate, with interchange and every other processing service folded into a single percentage. Across the US in 2024, that blend came out to $1.57 per $100 of card payments, yielding $187 billion in fees. Credit ran 2.3%, debit and prepaid 0.71%. And Visa? Its net revenue last fiscal year, every fee, every service, everywhere, was $40 billion on $14.2 trillion of payment volume, 28 cents per $100. The big cut was never the network's fees. It's interchange, and it goes to your bank. Visa's own SEC filing says that if interchange fell, issuers might cut cardholder rewards. That's Visa telling you where your points came from, and unlike whose line is it anyway, your points do matter. Now, you may be thinking, what about debit cards? Debit isn't a cheaper credit card. It's a different machine. Each debit card has a PIN, a personal identification number. Type it in, and debit sends a single message. The ask and the bill are the same dispatch, so nothing waits in a batch. And on debit, Visa doesn't set the ceiling. Since the Durbin Amendment, the Federal Reserve caps what a large bank can charge. 21 cents, plus 0.05%, plus a penny for certified fraud controls. The store even picks the road. Federal rules make issuers put 2 unaffiliated networks on every debit card, and forbid them from stopping a merchant routing over the cheaper one. And that's the difference in one number. Credit costs a store about 3 times what debit and prepaid do. Same coffee, same hot dog. The 2 seconds you experienced post-tap were really a digital Q&A session. The payment was a batch file, a net position, and a wire a few days later. Every tap opens a tab. The bar closes at the end of the day, and the banks settle up without ever counting your hot dog and coffee. If you want the rest of the plumbing, why a transfer still takes 3 days, subscribe to find out.